everybody. Hope you're having a good day out there. Hope you're enjoying the spring weather. Since we didn't really have a spring, now we're having it, and I think everyone's rejoicing. Anyway, we're going to talk about a financial planning topic of alimony and divorce and how the new tax code fits in with that. First, though, I just want to talk about my shirt. I bought it a number of years ago at the Mall of the Americas, which is by the Minneapolis-St. Paul Airport in Minnesota. And I'm walking around, I'm bored, I'm getting ready to walk back to my hotel, because I was staying right close to the mall. And all of a sudden I turn the corner and boom, I see this shirt. And I walked up, they didn't have any price tags on it, I grabbed one, I walked up there and said, hey, I want to buy this shirt, I don't even care how much it costs. He goes, well, we haven't even had a chance to put the price tags on them yet. And people just buy them. They buy them. No women buy them. It's only the men. And if they are with their significant other, the significant other says, well, that's stupid. Why would you ever wear that shirt? But anybody who's watched Animal House, anybody who's a fan of John Belushi, knows where this shirt comes from and why it is so important in the minds of men. Not that I condone drinking and doing bad things, but it was just a funny movie. So let's talk about divorce and alimony, which some of the things John Belushi did and some of the bad things that they did in that movie, probably if they were married, would have led to divorce. Let's just be clear about that. But there's some misconceptions about this. Now, the new tax law that was signed into law at the end of 2017, almost all of the provisions go into effect January 1st, 2018, right? Except for the new alimony rules. For any divorce agreement signed after 2018, so that is January 1st, 2019 forward, any divorce agreement in which you are paying alimony and you sign it after January 1st, 2019, alimony is not deductible. Okay, so people go, wait, what happens? I got divorced 10 years ago, and I'm paying alimony. So you're telling me after 2019, I can't write that off? After 2018, starting in 19? No. You are grandfathered, so you are under the old rules. You will be able to write it off, and your ex-spouse will have to claim it as taxable income. Last item here. People say, wait a minute, why did they wait? Why are they waiting an extra year for it to go into effect? The reason why they did that is because there was a lot of pushback from divorce attorneys. Because they said, look, we are negotiating agreements going into the end of the year. And it's the holidays, you have Thanksgiving, you have the New Year, you have the Christmas holidays, Hanukkah, etc. And they said, look, people aren't going to have these things set in stone by January 1st of 2018. And we'd actually have to change. We'd actually have to change the terms of the agreement if you're not able to write it off. So what they did, the alimony portion of it, so what they did was they said, look, Congress said, we'll give you an extra year. So that's how I was this. Let's just pretend you have one spouse, okay, a woman. She is making $1 million a year. She's in the highest tax bracket. She's paying alimony to her ex-husband who doesn't work at all. Here's what's happening. That ex-husband gets $100,000 of alimony, we'll say. That ex-husband has to pay taxes on that $100,000. But that $100,000, because we have a progressive tax rates, is much lower in terms of the amount of tax that person will pay, the ex-husband, as opposed to the deduction that the higher earning spouse gets. So the higher earning spouse may be able to deduct it at the highest tax bracket, which now is 37%, whereas the actual spouse receiving the alimony, they actually may only pay 12 or 15% taxes on it. That's how that works. So, I want to thank you all for being on this little video, and we'll see you for other ones.